Good morning, good afternoon, good evening, good night, wherever you are, whenever you are. Welcome to a new Breakout Solutions live stream. I'm your host, Matt Patiri, here with you today with another Bitcoin technical analysis video. Well, the market has been boring for quite some time now. Basically, we have been in a sideways / downtrend since the 14th of July. So Bastille Day. We commenced it basically all the way back at the 22nd of June. And yeah, it's been just really slow grind down. You can see that Bitcoin still maintaining this trend line. Looks like we are approaching a touch of this trend line any minute now. And during this period, we can see that there's been a decrease in volume, okay? As we've been going up, decrease in volume. So this could be distribution from the whales, meaning they started to accumulate down here and now offloading their bags because they're sense in weakness. But not only that, but because Bitcoin did go up about 100% since the bottoms here at the start of the year. So we're going to get a resolution sometime this week, you would hope. I thought it was going to be last week, and this week is much the same. We can see if I turn on the Bollinger Bands that the Bollinger Bands on the daily are tightly squeezed. The same on the weekly, which means, yes, you've probably heard it everywhere, and I'm sure every other YouTuber that does a bit of technical analysis is saying, big move incoming, or they're probably clickbaiting you with some amazing titles. But yeah, Bitcoin has broken out from this downward trend line and has tested it once, twice, and now coming back down, looking like possibly a third time. So right now, we're kind of in no man's land. If you want to take any trade right now, a medium risk play would be having some buy orders below these wicks here. So concentrating on just having or dollar cost averaging. Where's my little box? There we go. Basically just targeting this zone right here. This zone is where there's a fair bit of liquidity. You've got everyone that's sort of longed around here that would have their stop loss around here. So if we do come down, yes, I do expect a reaction, but I'm not, I don't expect the trend line to possibly hold. It would be great for it to hold, but there are some concerning signs, especially since today we closed a new week, that I want to point out a couple of things that I looked at. So let me just remove some of these indicators so I can just make it less confusing for you guys. And let's bring on the good old school MACD. So the MACD is moving average convergence divergence indicator. And we can see that on the weekly, it did have a bearish crossover that was confirmed this week. So we crossed over last week, but we needed for the candle to remain closed in order to see what would happen. Now, of course, we can do something very similar to what we did last time when we crossed over, where we have a small crossover and then we still have a pump to the upside. But that is quite irregular. Okay, it's quite irregular for us to have something like that. And what we're going to do in order to determine this irregularity, we're going to look at history. So as history shows us, it's very uncommon for us to cross over the moving averages and have just only a couple of candles before continuing the push to the upside and then having a further continuation. So this is what's got me a little bit bearish, because we do have pretty easy divergence from here to here. So we went higher in price, and we have a lower low in the histogram candles on the MACD. Not only that, but whenever we do have a crossover, a bearish crossover, which is when the blue moving average moves over the red moving average, that usually tends to signal, quite a decent sell-off. So we'll just do a little bit of history to recap for you guys. So we'll just mark out a couple of these bearish crossovers so you can kind of see what the result is. And not only that, I've marked the crossovers above the zero line. I haven't marked the crossovers below the zero line, because if you watched some of my content before, you would know that a crossover below the zero line, like this one right here, this means that we probably had a really, really bad drop-off. Okay, really bad sell-off. So when we have a positive crossover above the zero line, like this one, that would be a very bullish crossover, and I can assume that price was expanding quite aggressively there. So if you do like to use the MACD, always look for the crossovers. It's going to be a bigger push to the upside if we cross over above the zero line, and if we cross over bearishly below the zero line, even worse. When we cross over bullish above the zero line, below the zero line, like here, this is just like a normal move. We know that we're probably going to get some upside, but it's not going to be explosive. Okay, it's going to be a slow grind. We're kind of getting out of that bearish sentiment back into the bullish sentiment. So crossover below the zero line, a bullish crossover below the zero line is not going to produce an exponential move like this one. So now that we've marked off our crossovers, let's bring the chart back. Let's make this a little bit larger. So let's look at the last time. Last time we had a bearish crossover above the zero line. Okay, it was a small sell-off. So right now, bearish crossover above the zero line. We're not going to get a huge sell-off, but it's still concerning nonetheless that we have a bearish crossover. Look at this time. This is the time that I did mention when we get a bearish crossover below the zero line. It's kind of like a double whammy. I like to call it a double whammy. So we're below the zero line. If we have a bearish crossover, we tend to have a cascading fall. And look at that. Look at that. Really, really bad. When we have a bearish crossover above the zero line, it's not as bad. Yes, we did sell off, but we didn't have that capitulation that we had post 48,000 back here. And as well, as I mentioned before, when we have a bullish crossover above the zero line, then we tend to have an exponential move. So if we look back at history, it's very rare that we have a couple of candles, a couple of histogram candles before we have a reset. So you can see here, this is probably the only ever last time where we had one bearish candle on the weekly, and then we continued to the upside. I mean, if we look at the price action, that was in the midst of the bull market. That was below the zero line. This was above the zero line. But yeah, it's not very common where we just have a couple of histogram candles and then we continue, we don't have any sort of bearish action. So right here, this is why I'm sort of concerned. I'm concerned that we've had the bearish crossover on the weekly, which signals to me that we might have, this might be finally the 40% pullback that I've been anticipating. I was expecting the price to go higher. I had been bullish for quite some time to at least get to $35,000, possibly $40,000. But because of this really simple indicator, I now possibly think that this 31.8 may have been the local high for this, the first half of the year. And now we may look for a 25 to 40% retracement. So 25% sort of brings us back down to about $23,500, and a 40% reset or retracement will bring us back down to these $19,000 lows. So both are, I guess, in play, especially if we do break this trend line. It's going to be a very, very, very quick cascading collapse. Bitcoin is more than likely. I mean, if we look at the run up that we had back here, we didn't create any support. The only support would be around here, which we've already sort of found the liquidation. We had the liquidity grab from there already. The next part would probably be around here. So we're looking at $27,000, but that would just be a total change in market structure, because we would probably come down to 27, come back up, retest the trend line, and then probably break down, because most people are gonna short this retest. So that's something that I'm anticipating if this trend line does not hold. If this trend line does hold, I could expect a fake out to the 618. Right now, the 618 is currently at $30,560. Let's just say we do go a little bit lower. Let's just say we get to this trend line. Maybe we wick down below, something like that. We're still going to try and probably break these highs, but then that might roll over, because we do have a lot of indicators that have said that we are oversold right now. If we go to the daily and I throw on my stochastic RSI, where are we? Stochastic RSI. So the stochastic RSI is showing that it is at its extremities. It's in the oversold territory. And when we're down at these levels, there's not much selling to go. So we need to have a bit of a relief rally, even if it's just a small little pump. for the bears especially, if they want the liquidity to push this down, they're going to need to get some people to FOMO long. So right now, you probably got, you know, half the population thinking we're going to go up, half the population thinking we're going to go down. If you're watching this, I can see there's 7 people watching. Why don't you let me know? Do you think we're going up? Do you think we're going down? I think right now it's split 50-50. So it's going to be very interesting. Whichever way we do go, we're more than likely going to have a fake out in the opposite direction. Now, the reason we do this, or the reason the market makers and the whales do this, is because sometimes there's just not enough liquidity in order to short the market or sell things off. So you'll have the bears, whoops, you'll have the bears, they're going to break things up mildly to the upside. They'll grab the liquidity that we have at 29,500, which was obviously a level you do remember back here that we were struggling to break. That's also going to be resistance now again. So if we can't, if we're going to probably we could get a push up to 29.5 and then a throwback to the downside. But if we are bullish and the bulls want to take this to the upside, what they're going to do is they're going to push it down first. Okay, so people that are going long here, they're going to bring it down, get people to stop hunt their liquidation spot because, you know, people are going long here. So they're going to probably put it below one of the most recent wicks, grab the liquidity, and then push it to the upside. So really, I do think that whatever the first move is, it's going to be indicative of where we're going to be counter trading towards. This is just how market makers do their trading. They need liquidity, and in order to grab that liquidity, they need to stop hunt some people. And over the weekend, we had some sideways action, which went nowhere. All right, so this sideways action that goes nowhere, this causes people to just basically long, short, and just build up their positions. They also probably, most people have no idea where this is going. It's up to the gods and the whales to decide that. But there would have been a lot of people just setting up their longs, setting up their shorts. So we have some, I would say that we have a fair bit of shorts that have their stop losses here. We have a lot of longs that have their stop losses here. And there's going to be a liquidity grab in either direction. We might even have a double liquidity grab. I've seen it before. We go up, grab the liquidity, come down, grab the liquidity, and then go back up like that. During those times, obviously, you don't want to trade. You don't want to risk any capital. You shouldn't even be trading, really, if you're watching this video. You should be just dollar cost averaging and only leverage trading if you are an experienced trader. But these are some of the games that we are going to witness in the short period of time. Now, it does look like we want to have a push to the downside. We can see that the stochastic RSI on the 4-hour is wanting to cross over bearish. Let's look at the shorter time frames, the daily, the 1 hour, sorry. The 1 hour is pushing down, but it looks like it's going to get to that oversold territory soon. So as I said, it's probably going to come down to this trend line and, you know, keep bouncing around until we finally get someone that's sick of this sideways action and is going to push the direction push the market in the right direction. The only thing that has interested me as well is the altcoins are doing quite well. Some of the altcoins have had some good pushes. I've been scalping YGG. So if you want to make some quick money, you can look at YGG. It's been very, very volatile. Where's YGG? There we go. If we're looking at YGG, this has been YGG over the last few days. All right. So it's had an absolutely explosive move. I've got my fibs because I'm doing some scalping, but yeah, it's gone up like 600%. Yeah, oh, sorry, 380%, so 4x from down here in the space of a few days. So we've had a few gaming tokens go to the upside. So I'm just wondering if we're getting a bit of a liquidity push towards the altcoins, which then may feed back into Bitcoin. This is the altcoin market cap. It's still on a downtrend, which means majority of altcoins are, you know, not doing too well. There's only a select few that are doing okay. Casper's still doing okay. YGG, a few gaming tokens are doing pretty good. But what we need to look at is there going to be any more liquidity provided to the total crypto market cap? So we're on the daily for the total crypto market cap. We can see that the stochastic RSI is at the bottom of the range. This looks a little bit more like distribution because this was not a higher high. So we can see we've kind of got this head and shoulders pattern. This is normally the Wyckoff distribution pattern at its finest. And it looks like, yeah, it may roll over. I was obviously quite bullish, as I did mention, when we were looking like we were going to break the 31 31.8 area. But now, right now where we are is just basically a bit of a no trade zone. If I was to trade, I'd just let you guys know I would probably long from here with a very short or tight, I should say. I would long from here with a very tight stop loss. And if not, I will wait for the break to occur, come back, retest, and then sort of short from the trend line, because that is, right now is not a good time to be in any position. Like either position you're in, you're more than likely going to be stop hunted. So it's best to remain safe on the sidelines, wait for clear direction, and then decide which direction you would like to trade. Guys, that is it from me. Thank you all for watching. Hi to all you 8 people watching this today. Lastly, before I let you go, we do have an event workshop this weekend. So if you would like to learn how to make passive income using using DeFi, check out breakoutnow.co/digital-prosperity-workshop. It's on this Sunday. It's a full day event from 9 to 5. There's going to be some education. We're also going to be helping you guys create a passive income strategy using decentralized finance. So if you're new to crypto, you're a complete beginner, you're not invested in the market, this is a perfect workshop for any beginner to start learning how to invest in crypto safely and securely while still making passive income. Guys, thank you all for watching. I do have a comment. You're on the sidelines. Yeah, just be on the sidelines. No need to risk any capital right here. You don't want to be early to short. You don't want to be late to short. It's okay to be late to the party once the direction has been confirmed. Because look, even if we do push to the upside, guys, if we can break this high, then yeah, I'll probably enter, a little long, because then it's, we've created a higher high. So we've got a low, a high, a higher low, a higher high, change of market structure. I'd be happy with that. But right now, there's no need to be long. The same way there's no need to be short, because things can obviously get thrown back in our way. I've explained to you the 2 trade scenarios. Wait for a clear indication that this is the actual bounce, and then feel free to buy or long, depending if you're spot trading or derivatives trading. And then, yeah, if we do break to the downside, don't just try and catch a falling knife and market order in. Just wait for it to retrace. If it doesn't retrace, that's okay. There's always going to be another trade. And all you can do is dollar cost average. All right, you can dollar cost average into your positions here. Just ladder in some positions every $1,000. Okay, so this is a really good opportunity for beginners to do something like this. So every $1,000, so you put some at 28,000, you put some at 27,000, and so forth. And if you would like a video on how to do ladder entries, feel free to comment below, and we'll be happy to share that with you guys on YouTube. But this is, a little bit more advanced level for people that are familiar with how to use centralized exchanges or decentralized exchanges, setting up limit orders. Some people can be a little bit confused on how to do that, but it's not too difficult. I find this strategy sometimes better for more advanced traders, or better than dollar cost averaging. But if you are a beginner, stick to dollar cost averaging into the market. Guys, that is it from me. Thank you so much for watching. If you have any comments, feel free to comment below, and I will catch you guys on Wednesday for the altcoin technical analysis video. Peace. Bye for now.